You want predictable cash flow that's backed by real estate, not stock market promises? Let's talk about the three investment vehicles built on first lien mortgages that keep your money protected and keep it productive. So, in this video, I'm going to break down three first lien positions and the reality of why accredited investors love them and which vehicles make the most sense if you want steady returns, ultimately, without the drama. So, number one is private real estate debt funds. Private real estate debt funds, they're diversified across a pool of first lien mortgages. At the end of the day, it's totally hands off. They're fully managed by somebody else. So somebody goes off and is either buying first lien mortgages or more often than not, they're originating first lien positions. They're lending money to people typically who are real estate investors, fixing and flipping, remodeling houses, or they're going to portfolio them and then ultimately get a bank loan and pay these first lien mortgages off. Typical returns in a portfolio like this are anywhere from 8 to 11%. Number two is if you don't want to do that, you want to skip the pooling, you just ultimately lend directly to those who are borrowing. So you're direct to the borrower. Your rate of return certainly going to increase, but the trade off is it's not hands off. You got some work there because you're going to be going and meeting a borrower, you're going to be underwriting a borrower, you're going to be doing the work associated with that. And for some people, that's perfect because they want to be hands on and they want that ultimately that extra bump of return. They're great for investors who like that deal level visibility. The third is to do either option one or two, but to do it with your IRA. So you self direct utilizing an IRA or a Roth IRA. So either your income is growing tax deferred, or in the case of the Roth, it's ultimately going to grow and then come out 100% tax free. Terrific vehicle to be able to maximize the gains doing this. So if you want predictable income with asset level protection, because these are real properties you're dealing with in first mortgage positions, it's one of the best tools available out there to accredited investors. And then if you want to see how we structure these deals at Little Guy Loans, I dropped a link in the description below so you can do that.